welcome back to Prime Wealth. We're so glad you're joining us today.
Absolutely. It's great to be here. With tax season approaching, there are some important changes that could really impact your financial planning.
Right. It's easy to feel overwhelmed with all the new rules and regulations, but we're here to help you navigate through it all.
Exactly. We'll be breaking down the key tax changes you should be aware of and how they might affect your finances moving forward.
And we're not just talking about the numbers, but also some practical strategies you can adopt to keep your financial goals on track.
We'll touch on deductions, credits, and even some retirement account updates that could benefit you.
Plus, we'll share tips on how to prepare for tax season so you can avoid that last-minute scramble.
It's all about making this process as smooth as possible for you, right?
For sure. So whether you're still working or nearing retirement, there's something here for everyone.
Let's dive right in. There's a lot to cover. First up, let's talk about the new tax brackets and what they mean for you.
So, Alex, why should our listeners really pay attention to tax changes right now, especially if they're over 40?
Well, Jordan, a lot of folks in that age group are starting to think more seriously about retirement, right? And tax changes can significantly impact how much they can save and how much they'll eventually have to spend in retirement.
Exactly! And with inflation still being a concern, it's even more pressing. I mean, the cost of living is rising, and suddenly, those savings don't stretch as far as they used to.
Right, and if your tax situation changes, it can affect your retirement timeline too. For example, if there are new tax brackets or deductions that are altered, it could mean you end up paying more out of pocket than you anticipated.
That's a scary thought. Can you imagine planning to retire at a certain age, and then realizing, due to tax increases, you need to push that back?
Absolutely. I've seen clients who were set to retire at 65, but had to adjust their plans because of unexpected tax liabilities. It's not just about the money, it's about the peace of mind that comes with knowing you're on track.
And it's such a personal journey, too. I mean, people have dreams. Traveling, spending time with family, maybe even starting a new hobby. A sudden tax change can throw a wrench in those plans.
Exactly. And let's not forget about healthcare costs. As we age, those can become a significant part of our expenses. If tax policy shifts the way we handle medical expenses or retirement accounts, it can hit hard.
That's a really good point. I think a lot of people don't realize how interconnected all of these financial elements are. It's like a big puzzle, and if one piece changes, the whole picture can shift.
Yes, and that's why it's crucial to stay informed. For instance, there are proposed changes regarding contributions to retirement accounts like IRAs or 401ks. If those limits change, it could impact how much you can save tax-deferred.
And for someone over 40, those limits can make a huge difference in their ability to catch up on savings. Every little bit counts, right?
Exactly. Let's say you're 45 and you want to maximize your retirement savings. If you can't put in as much as you planned because of new tax rules, it really puts pressure on your financial future.
It's not just individual situations either. The economy plays a role too. With everything going on in the world, interest rates, inflation, job markets, tax changes can add another layer of uncertainty.
Definitely. And for those nearing retirement, it's about managing risk as well. If taxes go up, it affects your net income and your overall financial security. It's a balancing act.
It really is. I think about how many people are relying on their investments to fund their retirement. If taxes eat into those gains, it can feel like you're running uphill.
Well, that's the emotional side of money, isn't it? It's not just numbers. It's about feeling secure, knowing that you can rely on your hard work and savings.
And, I think there's also this fear of the unknown. People over 40 are often starting to think about legacy, what they'll leave behind for their kids. Tax changes could impact that too.
Absolutely. If there are changes in estate taxes or gifting limits, it can affect how much you're able to pass on. That can be really emotional, and it requires planning.
So it seems like the urgency here is pretty clear. Staying up to date on tax changes isn't just about saving a few bucks. It's about safeguarding your future, your dreams, and your family's financial well-being.
You got it. And with the current economic climate, it's essential to keep a pulse on these changes. For those in their 40s and beyond, it's about being proactive, not reactive.
Right. So, what are some strategies we can talk about that can help our listeners navigate these potential changes?
Well, first, I'd recommend regularly reviewing your tax situation. Make it a habit to check in with a financial advisor to understand how changes could impact you personally.
That's a great starting point. And what about things like tax-advantaged accounts?
Definitely. Maximizing contributions to accounts like IRAs or HSAs can really help. And don't forget about tax loss harvesting if you have investments that have gone down in value. It can offset gains and lower your tax burden.
That's smart. And also, thinking about when to take distributions from retirement accounts can have tax implications too, right?
Yes, timing is everything. It's about strategizing your income streams in retirement to minimize taxes over time.
So let's dive deeper into these strategies and really arm our listeners with the tools they need to navigate this landscape. So, Alex, let's dive into some of the core strategies and rules of thumb that our listeners can really use to navigate these tax changes. What should they keep in mind?
Absolutely, Jordan. The first thing I'd recommend is to stay updated on the latest tax brackets and rates. You know, tax laws can change pretty frequently, and knowing where you stand can help you plan better.
Right. So how do people find that information? Is there a specific resource they should be looking at?
Great question. The IRS website is a reliable place to start. They publish updates annually on tax brackets, deductions, and credits. It's also worth checking out financial news sites or even consulting a tax advisor who can provide personalized advice based on your situation.
That makes sense. And what about deductions? Are there any new deductions or credits that people over 40 should be particularly aware of?
Yes, definitely. One area that's often overlooked is the deduction for state and local taxes, known as the SALT deduction. Depending on where you live, it can really impact your return. Also, if you're contributing to a health savings account, you can deduct those contributions, which is a great way to save on taxes while also preparing for medical expenses.
Ah, health savings accounts, or HSAs. They're like a double win, right? Tax deduction now, and tax-free withdrawals later for medical expenses.
Exactly. And don't forget about retirement accounts. Contributions to traditional IRAs or 401ks are tax-deductible, which can lower your taxable income. Plus, there are catch-up contributions available for those over 50, allowing you to save even more as you approach retirement.
So, if someone is turning 50 soon, they might want to maximize those contributions?
Absolutely. It's a fantastic opportunity to boost your retirement savings. For 2023, individuals can contribute an extra $1,000 to IRAs and an additional $7, $500 to 401ks. It can make a significant difference if you're behind on your retirement goals.
And what about tax loss harvesting? I've heard that's a strategy people use to offset gains.
Yes! Tax loss harvesting involves selling investments that have lost value to offset gains from other investments. This can reduce your overall tax liability for the year. It's especially useful if you're invested in a taxable account. Just remember to follow the wash sale rule, which prevents you from buying the same stock back too quickly after selling it at a loss.
So keeping track of your investments becomes crucial, right? What tools do you recommend for that?
There are several apps and platforms out there that can help you track investments and potential tax implications. For example, platforms like Personal Capital or Mint can help you see your investment performance and financial picture all in one place.
That sounds super convenient. And let's talk about charitable donations. Are there any new rules around that?
Yes, there have been some changes. For instance, if you're over 70 and a half, you can make qualified charitable distributions directly from your IRA. This allows you to donate to charities and not have that amount counted as taxable income. It's a win-win. Support a cause you care about and reduce your taxable income at the same time.
That's a great way to give back while being tax efficient. And what about the standard deduction? Has that changed recently?
Yes, it has. The standard deduction has been increased for 2023, which means many people will benefit from a larger deduction. For married couples filing jointly, it's now $27,700, and for single filers, it's $13,850. It's always worth calculating whether itemizing your deductions or taking the standard deduction will give you a better tax benefit.
So it's really about crunching the numbers to see which works best for you, right?
Exactly. And remember, if you're married, both partners need to agree on whether to itemize or take the standard deduction. It can get a bit complex, so make sure to communicate and plan together.
Communication is key, especially with finances. Now let's talk about estimated taxes. Should people over 40 be paying close attention to that?
Definitely. If you have income that isn't subject to withholding, like freelance work or rental income, you might need to make estimated tax payments throughout the year. Keep track of your income and expenses to avoid any surprises come tax season.
That sounds like it could be a headache if someone isn't prepared. Are there any tools to make that easier?
Yes, many accounting software programs, like QuickBooks or TurboTax, have features that can help you estimate your tax payments based on your income and expenses. It's smart to set aside money throughout the year so you're not scrambling to pay it all at once.
And what about those who might be approaching retirement? Any specific tax strategies they should consider?
As you near retirement, it's critical to think about how you withdraw from your retirement accounts. Different accounts, like Roth IRAs, traditional IRAs, and 401ks, have different tax implications upon withdrawal. Strategically planning how and when to take those distributions can save you a lot in taxes.
So a well-thought-out withdrawal strategy can really pay off?
Absolutely. It can affect not just your tax bill, but also your Social Security benefits and Medicare premiums. The more you plan ahead, the smoother that transition into retirement will be.
It's all about being proactive, right? Now, I know tax planning can sometimes seem overwhelming. What's a practical way for someone to start organizing all this information?
A good first step is to create a financial calendar. Mark important tax deadlines, schedule time to review your financial situation, and set reminders for contributions to retirement and HSA accounts.
That's a simple yet effective approach. And I imagine keeping all financial documents organized can help too.
Definitely. Use digital tools or even physical folders to sort through your tax documents, investment statements, and deductions. The more organized you are, the easier it will be when tax season rolls around.
And speaking of potential pitfalls, what are some common mistakes people should watch out for as they navigate these changes?
Well, one big pitfall is waiting until the last minute to start thinking about taxes. Many people end up scrambling and miss out on potential deductions or credits simply because they didn't plan ahead. Another mistake is not keeping accurate records, which can lead to missed opportunities or problems down the road.
Those are really valuable insights. It sounds like the key is to stay informed and proactive, which can truly make a difference in financial security.
Exactly. Taking small, consistent steps now can lead to significant benefits later on.
So those are some immediate steps you can take. Now let's bring everything together. So, Alex, let's dive into some of the common pitfalls people face when it comes to these tax changes. I think it's really important for listeners to understand what mistakes can happen.
Absolutely, Jordan. One of the biggest mistakes I see is underestimating the impact of changes. People often assume, it won't affect me that much, but then they find themselves in a higher tax bracket or missing deductions they used to rely on.
Right, and that can really catch someone off guard. I mean, you might think you're doing everything right, and then suddenly you owe a lot more than you expected.
Exactly. I had a client last year who didn't realize that the new tax law changes would affect the way his capital gains were taxed. He had sold some investments, thinking he'd just pay the usual rate, but ended up facing a much higher tax bill.
Ouch! That must have been a shock for him.
It was. He felt blindsided because he hadn't really tracked those changes or sought advice ahead of time. It's crucial to stay informed, especially if you're making significant financial moves, like selling investments or real estate.
I can see how that could happen. Another common issue seems to be not adjusting withholdings or estimated tax payments.
Yes, definitely. I've seen people who don't update their withholdings after life changes, like getting a promotion, having a child, or even retiring. This can lead to owing a lot at tax time, or worse, penalties for underpayment.
That's a good point. I mean, life changes often affect our finances, but not everyone connects those dots with their taxes.
Right. And it's not just about life changes. Even changes in tax laws should prompt a review of withholdings. I had a couple who, after a significant tax overhaul, continued with their old withholding strategy. They ended up owing thousands because they didn't adjust for the new brackets.
Wow, that's a tough lesson to learn.
It really is. And here's another pitfall: overlooking tax credits. People sometimes don't realize they qualify for credits, like the Earned Income Tax Credit or education credits.
I guess that can feel like free money if you don't know about it.
Exactly. I had a client who had 2 kids in college and didn't claim any education credits because he thought they were only for people with lower incomes. In reality, he was eligible, and that oversight cost him significant savings.
It's incredible how much we can miss just by not keeping up with the details.
For sure. And let's not forget about record keeping. Many people don't keep good records of their expenses, which can lead to missed deductions. Like, if you're self-employed, not tracking business expenses can mean losing out on a lot of tax savings.
That's so true. I think a lot of people believe they'll remember everything, but when tax season rolls around, it's easy to forget those little expenses that add up.
Exactly. A client of mine, a freelancer, didn't keep detailed records of his business expenses. When tax season came, he was shocked to find out he could have deducted a lot of what he spent on home office supplies, and even some travel expenses.
That's frustrating. So how can people recognize these danger signs before they're in too deep?
Well, first, staying informed is key. If you notice changes in your financial situation or tax laws, it's worth a conversation with a tax professional. Also, if you're feeling stressed or overwhelmed when tax season approaches, that could be a sign that something's off.
That makes sense. I think a lot of people just put their heads down and hope for the best instead of proactively checking in.
Yes, and regular check-ins can save you from those last-minute surprises. Another red flag is if you find yourself constantly having to pay more than you expect each year. That's often a sign that something isn't right with your planning or withholding.
And, of course, if you've had any significant life changes, that's a good time to reassess everything.
Absolutely. It's all about being proactive rather than reactive. And if you're not sure where to start, consider working with a financial advisor who can help navigate these changes with you.
So what can someone do if they find themselves in a situation where they've made one of these common mistakes?
Well, the first step is to assess the situation. Look at what went wrong, how it happened, and what you might be able to do to correct it. For example, if you've underpaid, look into adjusting your withholdings for the upcoming year.
That's a solid plan. I suppose it's about not being too hard on yourself either. Mistakes happen, right?
Exactly. The key is to learn from them and make adjustments moving forward. If you find you've missed deductions, keep better records for next year. If you've underestimated your taxes, reassess your financial situation and get advice.
It sounds like the focus should be on continuous improvement and being adaptable, especially as tax laws change.
Right, and staying in touch with a financial advisor can help you feel more secure and informed about those changes. So those are some immediate steps you can take. Now, let's bring everything together.
So Alex, with all these changes happening, it sounds like there are some immediate actions our listeners can take to stay on top of their tax situation. Where do we start?
Absolutely, Jordan. I think the first step is to really understand how these changes might affect your specific financial situation. A great starting point is to review your last tax return. You can look for any deductions or credits that might be impacted this year.
That makes sense. So if there are changes in deductions, it's crucial to know where you stand. What about tools or resources that could help?
Right. There are a few apps and tools that can make this process easier. For example, using tax software like TurboTax or H&R Block can help you navigate the new tax laws. They usually have updated features that reflect the latest changes.
And those are pretty user-friendly, right? I mean, even for folks who may not be super tech-savvy?
Exactly. They walk you through the process step by step. Plus, they often have features that allow you to import previous tax returns, which can save a ton of time.
Nice! And what about creating a checklist? I think that could be super helpful.
Definitely. Here's a simple checklist to get started. 1. Review last year's tax return, asterisk. Identify any deductions and credits you utilized. 2. Stay updated, asterisk. Follow reliable financial news sources to keep track of ongoing tax changes. 3. Consult a tax professional, asterisk. If you find yourself confused or overwhelmed, talking to a pro can provide clarity. 4. Organize your documents, asterisk. Gather all relevant documents, like W-2s, 1099s, and receipts, so you're ready when tax time comes. Consider contributing to retirement accounts *. Depending on your income and the new regulations, this could provide tax benefits.
That's a solid checklist, and I really like the idea of organizing documents early. It can be such a hassle if you leave that to the last minute.
For sure. And there's something to be said about a calm approach. If you start early, you won't be scrambling, which can lead to mistakes.
Speaking of mistakes, what habits can people build to avoid common tax pitfalls?
Great question. One habit is to keep a dedicated folder or digital space for tax-related documents throughout the year. Receipts, statements, anything you might need come tax season.
That's smart. It's almost like a tax season prep habit. What about budgeting for tax bills? Should folks consider that?
Absolutely. If you expect to owe taxes, setting aside a portion of your income each month can help avoid that stressful last-minute scramble. You could even treat it like a savings account. Just don't touch it until tax time.
I love that idea. And it creates a buffer, right? It feels less daunting when you've planned for it.
Exactly. And another good habit to develop is to review your withholding status. If you've had significant life changes, like a new job, marriage, or a child, you might need to adjust your withholdings to avoid surprises.
Yes, the W-4 form, right? It's easy to overlook that, but it's so important.
It really is. Also, don't forget to take advantage of online resources. Websites like irs.gov have a wealth of information about tax changes and how they might impact you.
That's a great resource. What about books? Are there any you'd recommend for someone wanting to dive deeper into tax planning?
Sure. J.K. Lasser's Your Income Tax is a classic. It's updated annually and breaks down complex topics into easy-to-understand language. Another great one is The Tax and Legal Playbook by Mark J. Kohler, which covers essential strategies for tax planning.
Those sound like excellent reads, and they empower listeners to take control of their financial futures.
Exactly. The more informed you are, the better decisions you can make. And remember, it's not just about minimizing your tax bill. It's about building a long-term strategy for financial security.
Totally. And for those who might feel a little intimidated, starting small is key. Building these habits gradually can lead to big changes over time.
Yes, just take it one step at a time. Maybe start with organizing your documents and then move on to reviewing your last tax return. It doesn't have to be overwhelming.
And if someone wanted to find a good tax advisor, what should they look for?
Look for someone who specializes in your specific needs. If you're self-employed or have investment income, for example, you want someone familiar with those areas. Also, check their credentials and reviews. A personal recommendation can go a long way.
That's excellent advice. It's really about finding the right fit for your unique situation, isn't it?
Absolutely. And remember, communication is key. A good advisor will explain things clearly and help you understand your options.
So, those are some immediate steps you can take. Now, let's bring everything together. Wow, what a journey through those tax changes. It's really clear that staying informed is crucial, especially as we navigate our financial futures.
Absolutely, Jordan. One major takeaway is understanding how those new tax brackets could affect your overall tax bill. It's essential to know where you stand, right?
Exactly. And of course, the importance of tax-advantaged accounts can't be overstated. Whether it's maximizing your contributions to IRAs or 401ks, every little bit counts.
And don't forget about the updates on deductions. Those could really impact your tax planning, especially if you've been relying on certain deductions in the past.
Right. It's all about adapting and making sure you're not leaving money on the table. And let's not overlook how crucial it is to keep track of those changes annually.
For sure. It's a dynamic landscape, and being proactive can really set you up for success.
So, as we think about our financial futures, let's remember that knowledge is power. Staying informed and adjusting our strategies is key to building that long-term security.
Yeah, and if this episode sparked any thoughts or questions, we'd love to hear from you. Don't forget to like, subscribe, and share this with someone who might benefit from it. Your friends and family over 40 will appreciate the insights.
And next time, we'll dive into the fascinating world of interest rates and their impact on your finances. It's a topic that affects everything from loans to savings.
So be sure to tune in for that.
Until then, keep investing in your financial knowledge. We'll catch you next time.
Take care, everyone.